This is a simple three-step price action strategy. It's called the ICT power of three, or at least that's the concept it's based upon. And I pretty much use this strategy every single day on Euro USD. I'm pretty sure it'll work on other pairs as well. But it consists of three steps, as you can see. The first step is actually something called the Asian range, and I will get into this a bit in more detail. But we have the Asian range first, which is what we base our trades off. We have the high point and the low point of the Asian range. Then we're pretty much looking for a manipulation, which I'll go through. And we're looking to position ourselves somewhere around here to get this part of the move. Now, there's different ways to look at it. You can either get a small part of the move, which is what I like to do, just a very small part, around 10 to 20 pips is what I look for. Or if you're more of a swing trader or something like that, then you can target obviously Asian lows and you can go for higher risk to rewards. But that depends on you and how much you want to risk and how much you want to gain, all of these types of things, win rate, all that, but you can backtest that. But essentially, let's start with the Asian range and how this simple three-step price action strategy actually works. So if we just forget this for a while, we have an Asian range. Now this is the Asian session, and the Asian range is basically the Asian session. Now this session runs from midnight to 6 a.m. Okay. So between midnight and 6 a.m. UK time, there's going to be a range formed, and you can actually get this sessions indicator right here. And you can copy my settings. If yeah, these are the settings, you can copy it. But essentially that will basically draw a box around for you of the Asian session, the Asian range. Now, between this point, midnight and 6 a.m., there will be a highest point called the Asian high. So let's say this is part of the range, so this is clearly the highest point. And I'll show you examples as well, don't worry. So this would be the Asian high, and the lowest point would be the Asian low. Now these 2 points are very reactive, meaning that once we take these points out at a certain time, there's usually a reversal that happens, or if not a full reversal to the downside, there is definitely some sort of movement down. And if vice versa, if the Asian low gets taken out, then there's a movement up. So if we take the Asian low out like that, there's usually a move up. So we want to get into this move right here only after the Asian low or the Asian high is taken out. So automatically, first thing you need to know is Asian session. Number 2 is Asian high and low needs to get swept for you to enter a trade. And then next thing I want to tell you is the midnight opening price. Midnight opening price at 5 a.m. there will be an opening price, 5 a.m. UK time. Oh, sorry, 5 a.m. So it'll be a 5 a.m. opening candle. You want to mark the open of that candle and just draw it out. Now the theory behind this, what I found, which really helped me with my win rate, is you want to be taking all of your sell positions above this 5 a.m. price. And you want to take all your buy positions below this 5 a.m. price. Now there are obviously times where you can take a buy all the way up here and it still works out. But what I've just seen is low probability and I want to get the highest probability trades. So that's another thing. So that's another thing for you to note down and use in the strategy. So the first step is to identify the Asian range. The second step is to wait for a manipulation. So you wait for a sweep of the Asian high or the Asian low. And the third thing is to actually enter. Now, when are we going to be entering? We are going to be entering between 7 a.m. and 10 a.m. UK time. 7 a.m. and 10 a.m. Basically, you can just write that here. 7 a.m. and 10 a.m. UK time. So this is your time window. So an ideal setup would look like this. We sweep the Asian high after 7 o'clock. Now we're in this time window. We look for a break of structure, retracement, and then we look for a continuation. This is the entry model exactly, okay? So now I'm going to actually show you an example of this working, but before I do, I want to just show you the exact entry model. So once we sweep Asian liquidity, so let's say this is Asian liquidity, Asian lows, right there. Once we sweep that, we want to drop down to the lower time frames, I'll say 1 minute, 5 minute, and you want to look for this formation. You want to look for a low, a high, a low, and then this high, a break of structure right there. Then you want to see a retracement into a fair value gap maybe, or the EQ. Now the EQ is basically a fib retracement tool, which is basically, I like to enter off the 0.48 just in case it doesn't tag me into the 0.5, 50%. But I enter there, literally a very mechanical entry, so I don't have to second guess. Enter there, stop loss goes below, and I target a 1 to 2 risk to reward. This is what the entry looks like, but it needs to be a swing high getting broken, and or swing low in the opposite scenario, and that's it. So let's actually look at an example of this working out on, well, last Friday. So this is the example, okay? So my session indicator has basically laid out this gray box around it, which is the Asian session. Now, as I said, it has a high and it has a low, which is at 6 o'clock. Okay, so these are my 2 points. I'll just make that a bit darker, which might help. These are my 2 points. So in this case, between 7 a.m. and 10 a.m., the Asian low was taken out. Right there. So the moment at 7 a.m. we got this move down, then I dropped down to the 1 minute time frame. Now look what I saw. So Asian low has been taken out right there. We are also above the midnight opening price, which is 5 a.m. right there. This is the midnight opening price. Now, if we drop down to the 1 minute, look what we have. We have a low right there at 7:10, a high, a low, and then a break. The break is right there. Okay. Now, there are 2 ways to actually enter this. You can either already enter just like this. You've seen a body close. It's a strong close. You can enter at the EQ and you can ride this up for however many pips it gives you. What I actually look for, which is a high probability condition, is a imbalance in a leg. I want to see the imbalance going up. The moment I see the imbalance, that is when I know I want to take a trade. So in this, there's no real imbalance in this leg up, okay? The first imbalance which comes is actually right there. This is the first imbalance which comes. So now I was interested, but I'm not going to just enter off the imbalance. I'm going to enter off the EQ. So extend my fib and then got tagged in right there. So it kind of lines up with the imbalance. But we can just delete these lines to make it a bit clearer. But yeah, we know we're below the midnight open price. We know we're in our time window, our kill zone, and we know that we swept Asian low. So all of these things are already happening, and only then are we entering a trade. Enter there. Stops can go at 5 pips. Minimum, I'd like to go 5 pips. And then, yeah, this goes to a 2.24, but we only look for a 2R. So there you go. So this is a perfect example of this 3-step trading strategy working. Now, obviously, it's not always going to work. Today, there was actually a loss, and I'm going to go through why that might have actually lost. But the main thing is you need to go back test this model. Okay, I've given you the 3-step model. You need to go back test it and see what things work for you, what days work for you. And TradeZeller and FX Replay are amazing softwares for that because they give you so many analytics and insights onto your trading. It's really nice. Now, as you can see, there was a trade here basically, right over there. I won't go into the entry model because I don't want to take up more of your time, but essentially there was a trade here. I didn't take that because of one thing. Now, if we look at the way we've exited this Asian range, this is the Asian high. Look at the way we've like gone above it. It's very, very impulsive compared to last week's price action, last Friday. Look how we've come down, but we're just hovering around this very corrective price action. Okay, and we got a nice move up and we got our entry model. Whereas if you look at this is a very like trending down, up, and then literally shooting up. That's number one. Number two, if we look from the Asian low to the Asian high, this is my standard deviations, and this is literally just shot through and closed very impulsively after the standard deviation, which shows to me from my data that it's more likely than not going to be a loss. So, and it's more likely going to expand than reverse. So I didn't really take that. I wasn't really interested in that as well. But essentially what I'm trying to say is that it's not always going to work. I've got around a 50% win rate, 47, 48% to be fair. And that gives me a good 4% a month. So I'm happy with that. And yeah, but this is essentially the 3-step price action strategy. And hope you got value out of it. Hope this was easy for you. If you have any questions, let me know in the comments below and I'll answer them ASAP. But that is pretty much it. Hope you got value once again, and I'll see you in next week's video. Happy trading and stay safe.